Welcome back. So what I'm going to start doing is showing you my Robinhood app right off the bat. I got some new software, so I think it'd be a good idea just to show you in real time what it looks like. So this week, Gamestop's kind of killing me. I'll get into that later, why I bought it, what's happening, and what I'm going to do with it. But overall for the week, not too bad. Down 0.06%. I'm okay with that. Just looking at my total percent so far. Ford's looking pretty good. Again, GameStop's murdering me right now. Apple's up overall. Bank of America, GE. Zynga's the stock that I got for free. I don't pay attention to that. eBay's been a killer, but it's gained some today, so that's good. Coke's finally up. AEIQ is the ETF I'm in that's using artificial intelligence. Kraft Foods is down. That's been dogging me. And CQQQ, which is my ETF for Asian markets, is doing pretty good. So overall, I'm pretty impressed with how they're performing. Maybe more surprised than impressed. All right, so here's how I use my Robinhood app. As I'm walking around, if I come across a company, I'll actually search it. So let's say I walk past GameStop and I'm like, oh, I wonder what that company's like from an investment point of view. So you can just kind of type it in here, and then when you see it, you can just click the plus sign and it'll show up on your watch list, unless you buy stocks, and then it shows up under stocks. So what I do is, as I'm walking around just in the world, I'm adding these. I'll pull out my phone, I'll just add these to my watch list. And then on Sunday, I go through and I start sifting through them. So I kind of want to show you guys how I'm sifting. So I've got this Excel sheet, and what I'm using this for is to sift through my dividend. What I'm looking for a good dividend stock. The first test it has to pass is, does it have a dividend yield? Yes or no. If it doesn't, I put it over here for my no dividend. It doesn't mean I'm not going to invest in these companies, or for my dividend portfolio, they don't belong. So I just kind of stick them off to the side, and I'll go to the next stock. If it does have a dividend, I go to the next step. You have to value the company and decide, is the stock price cheap, or are you paying premium? So basically, what should the stock price be, and are you overpaying or underpaying for it? So I do that with three methods, so I can sort of average them out. So for the first method, I use the Warren Buffett intrinsic value calculator, and you can get this off Buffett Books. I'll put the link below. And I use Morningstar because it has all the data in one place that I need for that calculator. So I'll show you real quick where I'm getting the data from. So the first thing is current book value. So I type my stock into Morningstar up here, GME. And I'm going to key ratios. All right, so current book value, look at the date. Book value per share, we're looking at 2103. Old book value, 11.57. Then you count the number of years in between, so just kind of go 1, 2, 3, 4, 5, 6, 7, 8, 9. Type in 9, calculate, and you get your average book value change. And you're going to plug that down here. Cash taken out of business, that's actually, you're looking at the dividend. So for 2017, it was $1.48. Type in 148. Current book value was 21.03. So now you're going to take this, and what the calculator is doing is it's comparing it against a 10-year federal note. So I'll put in 10, and then to get the 10-year federal note, you click this text, and it pops up the U.S. Department of Treasury, or you can just Google search it. You scroll down to the date, and you go over to the 10-year, and you get 2.54. So type in 2.54, hit calculate, and it calculates the intrinsic value of the stock. And this isn't definite, it's just a rough valuation. So I keep that number in my head, so it's about 44. I just did this a couple minutes ago and it said 50, so there's some fluctuation based on the current stock price, which is right now is dropping. So it's about $44 valuation. So that's method one. So this other site is Guru Focus, and I'll put the link down bottom. For some reason the Gamestop page isn't loading, but I got Microsoft to pull up. So you type in the ticker and it'll give you a quick what the intrinsic value is and what the stock price is. So I compare what this calculates as an intrinsic value with what I got from the Buffett book's intrinsic value, and I sort of average them out. And when I did this with GameStop, when I bought it, I got about $50. Looking at Yahoo, the price was about $18.90, so I said, oh, this is a really good value. So when I think that it's a good value, so what I calculate is higher than what it's trading for, I put it in this green box here. And I still don't buy it yet. That just tells me that it's worth looking into farther. So the final step is on Sunday, I'll take a look at these closer. And by that, I mean I'll actually dig into the financials. So I'll pull up GameStop. And before I look at GameStop, I'll just show you what I'm looking for. So if you look at a company like Amazon, you go to financials, and I start with the cash flow statement. And cash flow from operating activities. So this is the cash that's coming into the company by actually running the company. And this is a nice upward trend. So Amazon's got a really good cash flow so far. Investing activities, you want to see a negative number. That means the company has excess money, so they're investing, which is a good sign. And their overall investing pattern is going up. So they're investing more and more cash, so that's a good sign. And then financing, you also want to see negative numbers. If you see positive numbers under financing, that means that the company's taking out loans. That could be good or bad. Bad that the company's struggling, good if the company's about to buy another company. But typically you want to see this number trending in the negatives. And so you can see here, they took out a loan, they're paying it off, and now they're paying off even more. So that's a good trend. So after the cash flow, I look at the income statement. The revenue is consistently going up, and the gross profit is consistently going up. So that's another good sign. And then the next thing I look at is the balance sheet, and I'm rushing through this just to give you guys an idea of what I'm looking at. And so we're looking at cash. So we've got 19 billion. Short-term investments, 6 billion. So they got about 25 billion that they could just liquidate. And then current liabilities, they have about 7 billion in long-term debt, no short-term debt. So they look good financially. So this is what a good company looks like. This is kind of what you want to see on these three sheets. So what happened with GameStop? Well, when I originally sifted through GameStop, which was, if we look on my screencast, I bought in January 8th. And GameStop was my best performing stock up until last night, and I'll show you what happened. So, but I'm holding it for the long run, so these little up and down swings aren't going to kill me. But here's what happened. So January 8th is when I bought in. So I bought in around here, and for a long hold, because I thought the valuation was lower, or I thought the stock price was lower than the valuation. So I said, this is going to be a good buy. I can get a pretty good return off the dividend yields over a long hold. So all week I'm watching this price go up, and I'm really happy with my purchase, and it crawled all the way up to 2026, and it was my best performing stock. So I was like, oh, that was a good call. I made the right choice. So then what happened? Like, why did it crash here so bad? So if you go to OTC markets, you can look up news. So you just type in the ticker. Again, I'll have this link down bottom. And they put out their financials like last night, so pre-market today. So why did it crash? they had some good news. You can go through and read this if you want, but I'm not going to read it on video. But here's what I saw, and here's what I think happened. So before this, the trend was upward. So it was less than 393 in 2014, 2015, 2016. And I didn't have this column when I bought it. So I didn't have this data. So I guess the number one mistake for me is I should have waited until after the statement came out before I made my purchase, but I probably still would have bought it anyway. So as you can see, it was trending up nice, and then it dipped below their 2015 prices. So their net income dropped. Looking down under the cash flow activities, again, 2014, there was an upward trend, and then boom, it started going down, so it started changing direction. And I think this is what triggered the sell-off. Their investing activities still look pretty healthy, but here's another issue. So they borrowed money, they paid it back, and remember, I wasn't looking at this column. So I thought they were moving in the right direction, and then bam, they borrow $474 million. So that's probably not a good sign. Then I'm looking at the income statement, and more bad news. So again, the 2014, this was an upward trend when I bought, and then this data comes out, and you can see that it's diving. So it took a dive. So the 2017 financial statement just came out, and what that does is you can see it on it just destroyed the stock price. So we dropped from, crawled up to 2047 pre-market hours down to 1763. So that's dogging down for my week. So what am I going to do with it? I'm going to hold out. I'm going to hold on it. I'm not going to buy any more, but I think with the new gaming systems that are coming out, which is the Xbox One S and the new PlayStation console, I still think people are going to buy them from a GameStop. And this might be the last time they do it. I really don't know what the future of GameStop has. Some people are referring to it as like the next Blockbuster, and I can see that happening, especially if people are going to be ordering their consoles offline or online through Amazon. They're also downloading games. Bandwidth is so much higher that you don't need to actually go to the store and get a game anymore. You can just download it. My plan is to hold out until the wave of sales come from the next console, and if that drives the price up, I'll probably exit my position at that point. So that's my plan for GameStop. I'm not too worried about this dip. I think it'll eventually recover, especially when they start selling consoles. So that's my story with GameStop. It was doing so well. I was like, oh, I made such a smart move. And even around Thursday, I was looking at it from my app. I was looking at the 5-year, and I was like, oh man, this has got a bad trend. I go, but from my 1 week, I go, I'm up. I wonder if I should just sell it. But I said, no, you're not a swing trader. You're not a day trader. You're holding it for the long haul. So I said, I'll just hold on to it. And then I woke up this morning and I saw the pre-market drop, and I was like, oh no, what happened? But not a big deal. I didn't lose that much money. My portfolio is not very big. I just started out, so I'm only at about $1,000. All right, so let's get into what's important. So did I invest $200? 200 invested. And you can see what I've been doing with it. Sober, yes. I don't even think about buying beer now because every time I go to buy something, I'm like, man, I could get another share of Ford, or I could do something else with it. So I haven't even craved alcohol, which is weird because I was definitely an alcoholic for the last 10 years. Who knows? I might fall off the wagon. Did I lose 0.6 pounds? Yes. I'm actually at 230.4. So I lost a lot. Looking at my sheet here. On week 2, I was supposed to be at 235.4, and I'm actually at 230.4. So what was my strategy? Well, I cut out, obviously I'm not drinking beer. I also cut out all sugary foods or sugary drinks. So no soda, no juices. I've been mainly drinking this a lot, and my wife brews tea, so I've been drinking her tea, which I'm sure she's not happy about, but I've been drinking all her tea and just water. So just by cutting out sugary drinks, I think I've cut out a lot of calories. My eating habits, not so great. I feel like because I'm not drinking, I'm kind of rewarding myself with food, which is probably not smart, but it's what I'm doing. But it's working, so I'm not depriving myself of food. I just cut out sugary drinks. That's been my strategy. So I'll see how long that works, and if I bottom out, I'll try something else. But I'm happy with 230.4. Let's see, what's next? Oh, so that was good. Plus 20 subscribers. Did I hit that? Let's see. Nope. I'm still at 0. And I don't have very many views. But that's alright. So what was my strategy for fixing this problem? I will show you. So my strategy for fixing that is I started a Twitter account. You can follow that at Noob Investor VLG. And I'm basically following some market analysts like Motley Fool, and just kind of immersing myself in all things trade related. So if you want to follow me on Twitter, you can, and hopefully that'll drive some people back to my YouTube to increase my subscriber count, which is nothing. So other than that, I reached more goals this week than last week, so that's good. 200 invested. Gamestop. Was it a mistake? I don't think so. I think when the console sales come out, it'll be fine. And then I think I'm going to exit because I don't think, even though the intrinsic value calculator has it at 40, I just don't think the company's going to be viable in another 10 years. So I don't know how much I trust that. Sobriety, yes, I'll stay sober. I need that money for stocks. Weight loss, yes, I'll keep that up. No more sodas. And then I'll work on my subscriber count. So thank you everybody for watching, if anybody's watching. Don't forget to check out that Twitter and subscribe if you like this or like the video. Thank you very much. Take care.